Welcome back. I'm Pratap here. Today is 15th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action at our NeoStock YouTube channel. So here from the home page, if you scroll down to the playlist Supply Demand Zone Price Action course, click on this playlist, you will be able to access all the training videos. Even I have provided the link to this playlist in this YouTube video description. Click the link, you will get into this page and then scroll down to the bottom of this page. Here starting from lesson 1.1, all the training videos are accessible in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. And let us quickly evaluate Nifty and Bank Nifty. We have already drawn these chains currently. The 15 minutes high liquidity demand zone, which is there inside the daily demand zone, is activated. Because this is a high liquidity demand zone, you know that high liquidity demand zone is having the ability to create the zones again and again within this. See here, again another zone is created here, drop base. Inside the high liquidity zone. Now from this newly created zone, within the 15 minutes high liquidity zone, the orders are getting picked up. So even today the orders are picked up from this zone once prices are entered into this zone. Initially it has given a move from here to here because there is a supply. After that, in the next move, again another entry it gave. This time this supply is broken, and finally Nifty reached to this particular supply, drop base drop. And that way Nifty has given you over 115 points from here to here. From this zone to here, it has given around 115. It's a good move it has given you. Because all these entries you are getting with the help of these high liquidity zones. This is the point you have to observe. And this is about Nifty. When it comes to the Bank Nifty, Bank Nifty is having a daily demand zone and having Confluence with 75 and 15 minutes demand zone. And today prices haven't entered into the high liquidity. Within the daily demand zone they reached. From the daily demand zone it got the support, and from here it has given a move from here to here, around 370 points move it has given from the daily demand zone I am talking about. So there is nothing much from the high liquidity zones point of view in today's trading session for Bank Nifty. So now let's get into our high liquidity zone analysis. Yesterday we identified 6 high liquidity demand zones from daily time frame, 6 high liquidity zones from daily time frame and 75 minutes time frame. And out of these, we haven't got any trade today. But still, we have some interesting learning. AU Bank, you would have got a trade if you followed as per EMA, Confluence and Overextension concepts you learned in lesson 17 in our training program. So that we will discuss AU Bank as per that EMA, not about the high liquidity zone point of view, but as per the EMA Confluence point of view, if you would have taken a trade, how much profit you would have got, we will discuss that. And the 2 zones are violated. And we know the reasons they are going to be violated. And this is going to be another learning for the people who are currently practicing how a zone will be violated. And remaining stocks prices did not enter into the zone, so we didn't get any trade. First, let us discuss about the zones that are violated and how we identified. After that, we will look into AU Bank, how EMA Confluence concept might have helped the traders in getting the profit. I am not tracking those profits because currently we are tracking only high liquidity zone profits in our Excel sheet. But still, EMA Confluence is a powerful concept. Recently you learned a few weeks back. So this will be a good another practice example for you, AU Bank. Okay, first let us look into NMDC and Laurus Labs. Both are violated. Let me start one by one. First let us look into Laurus Labs because yesterday we got a very good trade. And moreover, we already discussed Laurus Labs. Laurus Labs is a 75 minutes high liquidity zone. That is what we have seen in our yesterday's video. We have a leg-in ERC candle. We have 1, 2, 3, 4 base candles and a rally candle. This is the way our software identified this zone. And yesterday we took a trade in this zone. In the recent price action, a 15-minute zone is created, a new 15-minute zone here in the recent price action, drop, base, rally. And within this we have drawn 5-minute zone. We have ERC candle as a leg-in and or even this one is also ERC candle as a leg-in, 2 base candles and a rally. This is the 5-minute zone we have drawn. And yesterday see the orders are picked up. And we got over I think around 12% ROI we got in yesterday after reaching the supply zone. And this is no more a fresh zone and prices went more deep inside, close to the distal line, not very close to the distal line, but close to the distal line. Definitely majority of the pending orders from this zone is consumed. Definitely we can't take any second trade. First of all, even if it reaches the type 2 proximal also, we are not taking second trade unless it is a high liquidity zone, the 5-minute zone. But otherwise we know the zone will be violated easily because it is a tested zone. This zone will be violated. We cannot take second entry. Second entry is allowed only in some special scenarios. Maybe from just entered this zone and you have such a huge rejection, you can dare to take second trade by taking some extra risk, by accepting. But here see, prices went more deep inside, more than half, and almost they are nearing to the distal line. When these many pending orders are consumed, it is a high risk to accept second trade in this zone. Even though the rejection is a huge rejection, but prices are near to the distal line. See today what happened? The zone is easily violated. Prices came down and the zone is violated. Not only the 5-minute zone, the entire 75 minutes high liquidity zone is also violated, but after that prices recovered, closed. Now the 75-minute zone is pierced. 5-minute zone is violated completely because 5 minutes prices closed below this zone. But 75 minutes point of view, probably let us look into the 75 minutes time frame, we will get clarity. See, price closed below this zone. One of these candles closed. Even this candle also closed. So even 75-minute zone is also violated completely. Now below a drop base rally is created and prices are moved up. And we don't know, this is a normal demand zone or some other demand zone that you will be seeing later. Okay, this is about Laurus Lab, how we identified this zone is violated. And same case for NMDC also. Look into the NMDC. This is a 75-minute zone, demand zone. Trading view is taking more time to display the data. Okay, now we got it. Here we have a rally, 3 base candles and a rally candle with a hidden body. If you add the hidden body, this is the leg out candle we have. See, generally people think this is a base candle, but actually it is a leg candle. This is how our software identified by adding the hidden gap into this. And previously prices entered into this. When previously prices entered into this, we have drawn a zone. This looks like everything fresh zone, right? When you are looking from the 75 minutes point of view, this is a fresh zone. Definitely this is a good zone for taking the trade. This is what the impression we get when you look from higher time frames. But real clarity you will get only after you reach into the lower time frames, that is 5 minutes. That's why fine tuning is very, very important, I always say. Okay, once you get into the 15 minutes time frame, we have a 15-minute zone here. Sorry, 5 minutes I'm showing. We have a 15-minute zone. We have a drop candle, we have 3 base candles and a rally candle. Drop, base, rally. And 15 minutes also, see, it is looking like an excellent zone. It's not yet tested. Maybe recently it is tested. 15 minutes is tested. But inside we have drawn the 5-minute zone. If you, from the 15 minutes point of view, if you are looking at what I am saying, see, prices recently reached and a huge rejection from here, but this 5 minutes area is it tested? It is not tested. That's why we think this 5 minutes area is a very strong order flow. Definitely we can take a trade. That is the feeling we are getting if you are looking from the 15 minutes point of view. Looking from higher time frame, that is called bird's eye view. Bird's eye view doesn't work in supply demand zone price action. You have to observe from the lower time frame only, you get clarity. Lower time frame looking means it is like microscope viewpoint. You have to observe at microscope viewpoint. Then only you get clarity, order flow is there or not. Now go to the 5 minutes. See, 15 minutes, everything excellent. Whatever you have drawn 5 minutes also excellent. But if you go to 5 minutes, you will get the reality. It's taking time. Yeah. Now see the 5 minutes. Within the 15 minutes, see the price action here. We have a drop base rally. See again prices came, they picked up, they went more deep also inside. They picked up the orders here. When they picked up the orders, let me zoom, you will get clarity. The prices went near to the distal line. Not very close, but more than half it reached, the prices. They consumed the orders. You have only a small portion left out. We don't know how strong the pending orders in this area. Definitely the zone will be violated. When already they consumed the orders from here. So this is the reason why we don't have much clarity whether how strong this zone is going to be. Somebody may say, see here there is a drop, base, rally. Again a new zone is created. Why can't we pick up the order? See again, once again prices came here also. Rally, again they came down. You may say again rally, base, rally. But previously the prices entered and picked up the orders from here. See here. This is the one. This is the one. Even moreover, all those zones who are newly created, these 5-minute zones here, they are all violated with that. Just pierced, I mean. All these orders are consumed. But this is the area recent price did not enter, but that is already consumed earlier. See how institutions are trapping us, trying to trap us. That's why you should carefully observe all these things. Because this is a already tested zone. See, today what happened? Easily the zone is violated. So here easily it is violated. Here because below some pending orders might be there. Sometime it is resisted in this area. After that, the candle came and prices came down. Thereafter, institutions created some new zones, again pushed. That is a different story. But this zone is violated. The 5-minute zones, fine-tuned 15-minute zones, all are violated. What about 75-minute zone? If you look into 75-minute zone time frame, you will get clarity. Is there any candle closed below this zone? Yes, it is closed. So completely 75-minute zone is also gone. So this is the way we identified these zones will be violated. That is what happened. First of all, we all should understand. You all should appreciate your skills, what you learned so far. Many people doesn't know when a zone will be violated. But we build a skill. With the help of that skill, we are identifying. We are fine-tuning the zone. Lower time frame levels, we are monitoring. The order flows are strong or not, we are checking. If the order flows are there, then only we are confirming the zone will work. When you build such kind of superior skill, many times we are escaping from the stop losses. That's why I always giving importance to fine-tuning the zone. I've been shouting for the last 4 months. Focus on fine-tuning the zone. Focus on fine-tuning the zone. The 2 reasons you need to focus. One is risk management point of view. Second thing is checking the quality of the price structures. Because I introduced a concept called price structure. They plays the major role. How good your price structures within that zone. So this is the only way a demand and supply zone trader survives. Okay, these are the 2 zones. We are already identified, they will be violated. That is what happened today. We didn't plan any trades in these zones. And apart from that, the next one is AU Bank. AU Bank is a daily zone. Let's go to the daily time frame. Daily supply zone. This is a drop-based drop. Have you noticed this 75-minute zone is having confluence with daily exponential moving average? And earlier there was price overextension. This price overextension is completed now. How it is completed? Prices moved in a narrow range over a period of time. Lot of consolidation took place here. That way overextension is completed. So at the time when consolidation, when there is such kind of consolidation took place, at the time of overextension you will get only short-term returns. If price overextension completes, if prices are moving up and reaching, that is a correction. At the time, during price overextension, you get a very good swing returns. You have to observe these 2 points. During consolidation, if price overextension completes, you get short-term returns. And if it is a correction and if there is a correction and price overextension completes, if there is a correction in the stock and price overextension completes, with the help of the correction, you will get swing returns. Very good returns you will get. But in this example, the price overextension is completed with consolidation in the price. So obviously you have to plan only short-term returns. And moreover, this is a high liquidity zone. And also you remember during price overextension, if there is any strong zone is there, definitely it supports multi-testing. Generally it happens because near the EMA only prices will be moving. See here, this is one, this is the second, this is the third, this is the fourth. All these candles are from this zone area only. Within this area. That way, if you would have taken a trade here in this 15 minutes time frame level, why we didn't plan, that I will explain. Suppose if you would have planned a trade here, today during the intraday, you would have got around 7,150 rupees profit, which is 6% ROA, return on the investment as per one futures lot. But why we didn't plan the trade? The reason is risk. I already told you. The maximum acceptable risk for your one futures lot cannot exceed 2% of the risk. If you would have planned cash trade by using the concept position sizing, maybe you would have taken a trade. You would not have got this much return ROI, but you would have definitely got the profit today because your risk would have been managed. How to do position sizing, I will explain in the next chapter. Lesson 19 I will explain. Lesson 19 you have multiple videos. First video I will explain stop loss. Second video position size. And both training videos I will complete during this week only. Probably before Monday I will complete both the lessons. Because that is very important. If you complete with that, you will be in a comfortable position. You will be almost ready for doing your real trades after completing position size. Because all these days you people are doing paper trading. And one more, lesson 20 also important lesson I should complete. When you have to reject the trades, even though your odd enhancer score is everything is good, that I will explain in the last lesson, lesson 20. With that, phase 2 will be completed. Most probably I will try to finish phase 2 training program during this week itself. At least by mid of this week I will try to complete this coming week. Okay. So this is the one. Here already we have a 75-minute zone. Inside 75 minutes, inside daily we have drawn a 75-minute zone here. We have rally, base candles. We have a drop candle, base, drop. This is a ERC candle. And within this 75-minute zone, again we identified a 15-minute zone here. See here we have a rally candle, two base candles, drop. This is the way you can consider. Or this entire candle is a ERC candle, failed ERC candle, big candle. And you have a base candle and drop. This is the way also you can draw the zone. This is the ERC, wrongly I marked. We have to plan like this. The 15-minute zone. And what about 5 minutes? 5 minutes also comes almost the same. But here I have drawn only type 3 entry for our trade point of view. That is, actually I want to take only type 3. If I am going for type 1 or type 2, they are almost same. And the risk is 2.3%, something close to 2.3%. It's beyond our accepted risk. Maximum acceptable risk is 2%. Because it is exceeded, what I did, I planned for only type 3. Moreover, prices already entered into this area, the type 1 area. And the risk is very high. There is nothing wrong in accepting a trade at type 3. So look into 5 minutes time frame. See, this is a ERC candle, failed ERC candle. You can use this as a leg-in. Then you have 1, 2, 3, 4, 5 base candles. And type 1 means almost the same, even 5 minute zone also, type 1. If it is type 2, you would have drawn your zone like this. Still the risk is a big risk. and moreover prices just touched. But still there is a big order flow is there. That is the reason why what I did, because you have such a big risk, why can't we go for type 3 entry? If we get a chance, okay, fine, because prices haven't entered into this area so far. And this depth is also good enough to consider having order flow inside this area. So with all these things, I evaluated, and moreover, if I look into this 1 minute's time frame, even I looked into the one minute's time frame, there is an order flow. See here, the order flow is started here. We have a rally, base, drop. Within this, whatever we have drawn this. Exactly here, you can draw 1 minute's time frame. So by considering all these things, because I checked whether the order flow is there, again you see here, rally, base, drop. So this entire area, order flows are there. Because order flows are there, and the prices haven't entered into this area so far, I thought 5 minutes, this is a good option to plan trade in type 3. But today prices didn't enter into this area. Prices entered into this type 1 area. See, they just touched this area and came down today. See here. They just touched. This is the 15 minutes area. And also this is 5 minutes proximal type 1 area. The 15 minutes and 5 minutes are exactly same for type 1 proximal. And if you take an entry here, it is going to be more than 2% risk, which is not permitted me to take the trade as per our high liquidity zones point of view. But I also looked into, previously I told you, generally what I do every time after drawing the zone. I don't know how many of you listened this point in one of my earlier videos. Every time I draw the zone, lower time frame zones, I go to daily zones, and I will check if there is any confluence is there, EMA confluence. This is my habit. So that way I identified this zone is having EMA confluence, daily EMA confluence. Most of the times the daily EMA confluence will give good results. And moreover, this daily EMA confluence came after overextension is completed. There is a price overextension earlier. That's why definitely this zone will work. That is the reason why those who wants to plan, they should plan not as an high liquidity zone, but as your zone confluence point of view. If you can manage the risk and if you can do something, definitely you will get a trade here. That way we can plan. There are other techniques also to take an entry here, but reducing the stop loss. And the technique is based on your 1 minute whatever you have seen. Based on that you reduce the stop loss. You take entry here, but your stop loss will be here. Like this you can plan the trade. Something like this. You would have taken, nothing wrong with this. Now risk is within your limits. If those who have taken, probably you would have got a good trade. But why you are doing such kind of adjustments? Because of EMA confluence. Because of the EMA confluence, based on that you do adjustment and planning the trade, but not based on the high liquidity zone point of view. So that is the reason why I didn't consider this as a HLQ trade. But definitely this is a valid trade based on EMA confluence. Because all these adjustments are part of EMA confluence risk management point of view, not HLQ trade risk management point of view. And many times HLQ trade, we don't plan trades outside these fine-tuned areas. We will wait until prices reach into the fine-tuned area. See here, the entry is just outside the 75 minutes fine-tuned area. We don't take such kind of risks for high liquidity zones. Even if you miss the trade, not a problem. Because high liquidity zone strategy we follow very strictly. because sometimes small mistake, it leads to disturb our trade. Missing the trade is okay for us because high liquidity zones, every day we get many trades. Maybe today we missed the trades. But during a month, if you have 22 working days, at least 18 working days, you will get some trades. Worst case, you may get a failed trade also you will get. But that is also a trade only, valid trade only. But that is a rare situation. You got only one trade that is stopped out, is a rare. Such kind of thing happened only once in last 5 months time period. One day we got only one trade, that is stopped out trade. Okay, but I hope this is a learning for you, how you are adjusting and planning your trade for your EMA Confluence point of view. This could have been, let me delete the higher one. This could have been your trade. How you did? By adjusting with the help of 1 minute and 15 minutes combined both together, and exactly you made sure this is the area is having daily EMA Confluence. See here, the zone is having daily EMA Confluence. Okay, now I am deleting this because next time again this analysis is required for our because next time again if prices enter into this zone, if our software reports this zone, remember our software has to report. Without software reporting, if you are taking trades in the high liquidity zone, mostly your trades will be disturbed. Our software has to display because software is not only considering the zone, it is also calculating the volatility conditions of that particular stock or the market, and then finally it will decide to show the stock near demand and supply zones. And that's why whatever the reports are showing, today's report, whatever the zones are displayed, they are valid only for tomorrow's trade. You cannot take day after tomorrow or some other day. Tomorrow means the next trading day. For example, tomorrow is a holiday. Whatever is reported today, they are valid only next trading day. That is Monday. Monday is the next trading day. That is what I meant by tomorrow. Okay, you got it clear how EMA Confluence would have helped you to take a trade, and it is a successful trade. And remaining stocks, idea we didn't plan a trade. 5-minute structures are not good. So idea is this is a drop based drop, daily supply zone. Inside we have drawn this high liquidity zone. Again drop, 4 base candles and drop, almost the same as 70 daily zone. And now again here we have 15-minute zone. We have a drop, 3 base candles and a drop candle, follow through candle. We have a 15-minute zone. The moment I'll get into the 5-minute zone, see here, the 5 minutes area, we have a leg candle, we have another leg candle. This is not a medium size candle, this is a bigger than medium size. If it is a medium size candle, we would have added part of this zone. Even if you want to consider this is a medium size, let us assume you are assuming. See, candles 1, 2, 3, 4, 5, 6 candles are, this is exactly same as 15 minutes zone, and the risk is high. You cannot take the trade based on this much risk. I'm just telling you, if you assume this is a base candle, even then, risk point of view, you didn't take trade. But I consider this is a leg candle, bigger than medium size, and this is also a leg candle. Between there is no base candles. So I know I don't want to take. And moreover, previously also I told you, I commented about idea. See, all these idea candles, definitely I am sure algo traders are doing the majority of the trades. Then only you get such kind of price structures. I have doubt. Lot of algorithmic trades people are doing here, which is quite dangerous. Previously I told, because once idea was listed earlier once. But anyway, we didn't plan a trade in idea. Prices also did not enter. And next one is a Tata Communication. How I fine-tuned, I will explain. See, all these are all good learnings for the people currently who are learning the subject and practicing. This is a Tata Communication is 75 minutes, or yeah, it is a drop-based drop. This is also a 75 daily zone, daily supply zone, drop-based drop. Inside we have drawn a 75 minutes rally-based drop we have drawn, and inside that 75 minutes we have drawn 15-minute zones. We have rally 1, 2, 3, 4, 5 base candles and a drop candle. So within this 15 minutes, we identified a 5-minute zone, 2 or 5-minute zones. We have a rally based drop, and this one I considered as a ERC candle. The reason is you add the hidden body here. The moment you add the hidden body, it will get a body. So by considering this as a ERC candle, failed ERC candle, after adding the hidden body, the length remains same, but it will get a good body. Okay, base and drop. So here we have drawn a zone. So this is the way we planned. Even if the first one is failed, the second one will pick up the orders, because by the time it would have consumed a lot of demand, and demand would have been consumed. By the time it enters, we will get another trade. Suppose if the pending orders are very strong, here itself prices will go down. This was the trade plan. But today prices entered into this daily zone, but they didn't reach up to here. They turned back before itself. There could be several reasons why it was a turn back. Maybe some lower time frame zones could have pushed, and moreover it is during the last 2 hours of the trading session. Several reasons will be there. But anyway, they didn't enter into our fine-tuned area. And the next one is last one, Marico. Today trading view is very slow. Marico is a 75-minute zone. This is a rally, base candles and a drop candle. And inside this, we identified 15-minute zones, couple of 15-minute zones. We have a drop, base, a drop. Not a great leg out, but okay, because there is a move from here. And again here we have a drop, 3 base candles and drop. See, even this leg out is not very strong. But if you look into 5 minutes, you have good order flows. We have a rally candle, base candle and a drop candle. But here prices already tested this zone. Is it good enough to take second trade? Maybe people who wants to take a little extra risk can plan. The reason is the rejection is very strong and moved down. Maybe there is a still good order flow because prices didn't go deep inside. From the proximal line itself it moved down. That is one reason. Another reason is see the rejection before this in the next attempt. That means institutions might have added some order flow. Those who wants to take a little extra risk can take second trade. Otherwise, as per our rule, you are not supposed to take second trade unless this is a high liquidity zone. And again here, in the 5-minute zone, here we have ERC candle as a leg in, base candle, and this is again a leg out candle. Okay, this is enough body to consider. But the thing is, really order flow is there or not, I have a doubt. That's why what I did, I went to 1 minute's time frame and further fine-tuned that area to check whether there is any order flow. Because some rejections, a lot of rejections I found in that area, that's why it made it interest to me. The moment I went to see here, the 1 minute, we have a leg-in candle, base candle and a drop candle. Here a 1 minute order flow is there. See, prices are not even entering into this order flow area. See the rejections before. See the rejections before. That's why it made me to interest. Maybe this is the area. Risk is very small. Why can't we try once prices enter into this area and take a trade at 1 minute's time frame? Because this is the area order flow is there. Or maybe you can plan a trade a little below. Maybe it could be a high liquidity 1 minute area. Who knows? Based on the price action close, we are assuming it could be. Based on all these rejections, prices are nearing. If this is a high liquidity area, definitely again and again it supports multi-testing. So that is the reason why something interest to plan a trade in this 1 minute area. But anyway, prices didn't come. First of all, if prices has to come, first this zone has to be violated and then here. But can we plan a trade in this? That is up to you, because it is already tested. It is already tested, went a little inside and then came down. Second time before itself, before entering into this area itself, prices came down. So strong order flow is there. Sometimes taking little extra risk is nothing wrong when you want to get some successful trades. But if you are a beginner at an early stage, once it is tested, don't go for the second trade. Even if you miss the trade, not a problem. Once you earn the money, you have good amount of money in your hand. You don't mind losing some money. If your plans are, if your trades are go against your plans. But in the initial stage, first building the capital is very, very important. That's why we don't take extra risk, little extra risks. Always we go for a safe trades. So because it is tested, you don't plan any trade in this zone. But experienced people who already earned good money, probably based on all this price action close, there is nothing wrong in taking. If at all, you will lose a small amount of money. And here you will be planning. You will exit here if it is stopped out. Again you will plan inside this 1 minute area. Because something interesting here. The price action, all the price action close. Strong belief that it will work. So this is how Marico is planned, but today prices did not enter. They went up to here and then came. This is yesterday's price. Today's price action started from this candle, came down. Go to 5 minutes, you will get clarity. Yeah, this is today's candle. They couldn't move inside. Okay, anyway, we didn't get a trade. So this is about our analysis discussion. Hope some of this analysis will be helpful to you. Might have given you some thoughts, new thoughts in your mind. If you get some new thoughts in your mind, then it is a successful training session. And also, you might have seen a good example for EMA Confluence in this video. And also you got two examples that explained how we can identify well in advance a zone can be violated. Hope this information is useful to you. Let us all meet again in our next video.